Welcome to the deep dive. Today, we're getting into governmental accounting. Specifically, we're looking at governmental funds and their financial statements.
That's right. We've got some good material here on the big ones. The general funds, special revenue funds, and debt service funds.
Exactly. Our mission is to unpack these, figure out what they do, and really nail down the key differences between them.
It all comes down to tracking public money, really. These funds are like separate checkbooks for specific government activities. Helps with accountability.
Okay, let's start with the main one, the general fund.
Yeah.
Seems like this is set up right at the start of a government, and, well, it lasts forever.
Pretty much, yeah. It's the default account for all the general activities. Think administration, police, fire, the stuff not handled by a more specialized fund.
And the money coming in, it's quite varied, isn't it? Property taxes are big, especially locally.
Oh, yeah. Property taxes are often the primary source for local governments. But you also get franchise taxes, public service taxes, fees and fines, parking tickets, building permits.
Licenses too, right? And money from other governments, like grants.
Exactly.
Yeah.
Intergovernmental revenues, charges for services the government provides, maybe some investment earnings. It's a real mix.
Which makes sense because it pays for a lot. General admin, public safety police, fire again parks, libraries.
Right. Culture and recreation, all those core functions. It's really the operational hub.
Now, the accounting sounds a bit different. Modified accrual. And they actually record the budget.
Yeah, modified accrual is key here. Basically, you recognize revenue when it's measurable and available to pay this year's bills, expenditures, when the liability is incurred. It's not quite like for-profit accounting.
And it's always a major fund. Only one.
Always major, only one per government.
Yeah.
And it often acts like an internal bank, lending money short-term to other funds if needed.
Okay. And if money comes in or goes out and doesn't fit neatly into another fund?
It usually lands in the general fund by default.
Got it. The example showed a balance sheet, assets, liabilities, fund balance, and that statement of revenues and expenditures.
Yeah.
Shows a flow.
Exactly. Standard financial statements, just tailored for this fund type. They give you that snapshot of financial position and activity.
All right, let's switch gears. Special revenue funds. These sound, well, special.
They are. The key is that the money coming in is legally restricted or committed for a specific purpose, and it's meant to be spent. It's expendable.
So, like you mentioned, a gas tax that can only be used for street maintenance.
Perfect example. Or maybe a special sales tax percentage earmarked for, say, parks or tourism. Grants for specific programs fit here, too.
What about those grants? The source mentioned something about monitoring.
Right. If the government receiving the grant has to actively monitor eligibility and spending rules, it typically goes in a special revenue fund.
Yeah.
If they're just passing the money through, it might be a custodial fund instead.
Okay, makes sense. And these funds also handle some types of trusts where the money can be spent.
Yes, expendable trusts, like maybe a scholarship fund where both the original donation and the earnings can be awarded. The statements look similar. Revenues, expenditures, changes in fund balance.
Finally, debt service funds, paying off long-term debt.
That's their job. Accumulating resources cash, investments specifically to pay the principal and interest on long-term general obligation debt. Usually debt issued by the governmental funds, not the business-type ones.
Where does the money come from for that? Dedicated taxes.
Often, yes. Maybe a portion of property taxes is allocated. Or transfers from the general fund, or maybe even a capital projects fund are common too.
So it's like a savings account just for paying back bonds and interest.
That's a great way to think of it. Like a sinking fund in the business world. You build up assets to meet those future payment dates.
Is it always required?
Not always. Only if it's legally mandated or if the government is actively accumulating resources for future payments. Sometimes the general fund might pay directly. An important point. These funds don't show the total long-term debt on their balance sheet, just the amounts that are matured and currently payable.
Okay, so their balance sheet shows the cash and investments set aside, and the liabilities show the payments due right now.
Exactly, and the fund balance is typically restricted specifically for debt service.
So wrapping this up, what's the big picture for someone listening?
Well, understanding these funds helps you see how public money is organized and controlled. The general funds for core operations, special revenue funds ensure money is used for specific intended purposes.
And debt service funds handle that long-term borrowing responsibly. It seems this structure really promotes transparency, doesn't it? You can see where the money's supposed to go.
Absolutely. And here's something interesting to think about. Those restrictions on special revenue funds, How might that affect a government's flexibility if, say, an emergency pops up that wasn't planned for?
Good point.
Hmm.
And having those dedicated debt service funds, that must contribute to financial stability, knowing the debt payments are being planned for.
It really reflects the government's priorities and commitments. It's not just numbers, it's policy and action.
So, a final thought for you listening. Maybe think about your own community. Do you know if there are specific taxes funding specific things? How are big projects like schools or roads financed? This fund structure is the underlying framework for all of that.